Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market. So as you know, yesterday the Mnuchin comments in the Davos forum was really like the cold shower for investors, because it was the clear step out from the classical financial policy of the United States and strength of the dollar. And Mnuchin said that we are welcome the weakness in the United States dollar, and that was just significant impact that has triggered a rally against the dollar across the board, not in the gold market, but in the commodities and the forex market as well. So this speech actually has totally erased any opportunity for retracement that we have talked about yesterday. In fact, we've got just a minor harmonic retracement that we have already discussed, but before the speech there were some chance on two-leg retracement, but it hasn't happened, as just Mnuchin words have pushed the market higher. What we have right now, currently gold stands on daily overbought, but potentially it could move higher. Maybe some minor bounces also could happen here and there, but the major targets right now, guys, stands above these tops around 1380 area. Here we have incompleted ABCD pattern that we have talked about probably mostly in last year. And when the market turns down before it has hit the ABCD target, it was a bit surprising action. We said, well, that's not really normal. This market should return someday back and hit the target. So it seems that this day is coming. Also, if you'll take a look at this most recent ABCDs, A, B, C, bottom, D, it also will have the target very close to this one. So somewhere around 1385. So both targets stands above this top, and it means that this top hardly will survive. The breakout of this area will open the really huge potential for the gold market, because it will be another scale of the extensions, it will be another scale of patterns that will be open if market will exceed 1380 resistance. So right here. Well, that's what we see on the daily chart. So currently maybe it's not very good point where you could take the long position, because market at daily overbought. But for commodities, it's not as crucial as for financial markets. Commodities could stand in extension of the overbought and oversold conditions for a considerable period of time. That's why it's nothing really curious that gold market stands slightly higher than the overbought line and trying to continue move higher. That's why in the current circumstance I would say that maybe it's more it's better to trying to catch the opportunity for taking the long position rather than trying to anticipate any retracement, because anticipating of the retracement and taking the short position on this impulse action, it could be really very painful. So that's why on the gold market, guys, I think that we could follow the same setup that we have on the dollar index, on the euro currency, and this setup is based on the most recent thrust. Let's call it as the thrust of the Mnuchin speech. So maybe some European Central Bank meeting will impact on the gold market as well today. I do not know. But if minor retracement here will happen, maybe 1350, this could give us the chance for taking the bread and butter trade, because thrust stoppers exist. You could try to take the long position here, and after that you just could see when the market will hit the target of the bread and butter, you could take the half of your profit, move your stop to the break even on the rest one, and just watch what will happen. If market will continue tending higher right to the 1380, 1385, you just will keep the second half of the position. That's all. If not, well, in this case, at least you will grab the half of the profit. So that's the scenario that this could be used when the market stands at the overbought and you definitely do not know what really happened. But you could get the clear trading stuff, short-term tactical step as the bread and butter trade. So that's what we see right now on the gold market, and let's keep watching. So, but definitely some bounce somewhere should happen. Maybe indeed when the market will hit the major targets here around 1385, so maybe it will be some bounce down. That will be our primary object to watch for as opportunity to go along. But in the current circumstances, when the market is just tending to the major targets and they have not been hit yet, probably it's not the time to count on the deep retracement, and it's a better solution just to wait for some minor retracements that could give us chance to go along kind of the brand body trade or something of that sort. Maybe another harmonic pattern, harmonic retracement will be formed here. It's also possible. Let's, by the way, check this. Maybe it will be precisely in kind of the... No, it will be too much for a brand body, but here guys, actually you can see approximately the same action. So some rally up, minor rally. First leg was here a brand body trade. It's been completed. We also probably have traded. I do not remember exactly. Right, as you can see, right to the freight retracement, the harmonic swing, the half of the daily harmonic swing is a harmonic swing on the 4-hour time frame chart. If you will measure the harmonic swing to the upside, you probably could get approximately the same destination point. Right, it's very close. So let's keep watching and see what will happen here.